Good afternoon, good evening. Sunday, March 3, 3, 2 and 0 and 2. It's 8. No, so 338. Good morning, everybody. Sunday, March 3, 7 o'clock in the morning. I'm going to do a SPX focused update for the weekend, only because I was doing a little bit of work on it during the course of last week, and I'll get into it in a minute. But yeah, I saw on Friday, I did check on Saturday after I arrived. 51.37 is where you closed. You did make it a little bit higher than that, but hindsight being 2020, you come over and you see these charts and how the movement went during the day, and it's algo day, straight up algo day. And actually on Friday, it was all in the semis. The semis were rock hard, all semiconductors doing all the work. So yeah, that's what you got. But yeah, I left early because I flew over to Cebu because one of our members, Jim Hoyt, is over there volunteering and actually paying for a lot of it on their own. A group of doctors over from the US doing plastic surgery for children with cleft palates in multiple different stages. Fantastic work, fantastic human being, let alone what a cool fucking dude. This was where I was meant to stay at the Shangri-La in Mactan Island, and I wound up staying out over here, just over on the right of it, a little place called White Sands Beach. And I hadn't been to Cebu in, Jesus, must be 15 years since I had been over there. And let me tell you, the look from the picture, beautiful. When you get your feet on the ground, fucking disgusting. This entire beautiful blue, what you think looks like coral harbor, is all just fucking green algae. Over here in this space over here, when I got there Saturday morning at about 8 o'clock in the morning is when I arrived, there must have been 150 of what we call here these bunker boats. And it's all because of the Koreans. The Koreans have influxed over there to go diving. And at about 8:30, 9 o'clock in the morning, there were about 80 of them leaving this area, dumping all their diesel gas in the ocean as they chartered out here to go out to a beautiful diving spot. But yeah, in the hotel, absolutely fantastic. Outside of it, and more importantly, the road going to and from the airport, which is right here. Fucking, you think Chicago Prini Green is fucking bad? That is one of the biggest fucking hoodlum slums I've ever been in, and I'm from Miami. So, but Jim, rock solid. Dude shows up, never mentions it, never asks, and says, dude, here you go, box of Cubans. Padron 1926 series. I am looking for the opportunities when I will be able to start cracking these open with a beautiful, nice, hard liquor next to me and saying, this is what it's all about. Thank you very much, Jim. Quickly, like I pointed out there on Friday, 9:34 in the morning, ES 51.44.50 is what I've got on my chart. That would be about 35 points, around 51.35-ish in the event that they pump this. And as we looked already, it was an algo day. You got your pump. Going into this week, the major points of the week come in the middle portion of the week. On Wednesday, Jerome Powell testifies. On Thursday, we get the ECB interest rate decision, and they missed their CPI missed there on Friday morning. We had ourselves a little bit of an aggressive move to the downside prior to the opening bell there on Friday, and then we just got that move off of there. They've had a big miss on CPI last month as they got their report there out on Friday. Again, on Thursday, you get Fed Jerome Powell speaking, testifying, reiterating what he says on Wednesday. And then Thursday night, you have President Biden's shit my pants of the union address on Thursday night, 9 o'clock at night.
Okay, so basically everything's fucked because of you. The border is wide open, tons of drugs are pouring in so that your fucked up son can get high while he parties with prostitutes. And on behalf of my colleagues, please go fuck yourself.
Could you repeat what he just said?
Sure, sir. What my colleague just said is that we all hate you here and we would all like you to go fuck yourself.
Way past his bedtime, but he doesn't know what time it is anymore. Anyway, so that is on Thursday night. So, nope, we don't want to start there. We're going to start over here. And again, you got a new all-time high over on the SPX on Friday, 5140. We broke that 5011, 1106. Clear indicator that that was it. We were definitely heading to the upside. We filled the overnight gap. 5094 was the lows. And we went on to our move. So that in its of itself brings us into the full moon picture, which I'll get to in a minute. Because we now have, I'll come back onto that. The full moon window having closed and that volatility window that we talked about coming to an end, it's over. So that's it. As far as the window of volatility goes, it's over. Now, on a bigger note, for the one individual posting ridiculously stupid shit in the chat room who will very, very soon be gone and deleted from existence, what do you care if we're going up? You're day trading. You don't give a shit about where we're going until you get into the opening bell. The new moon is coming on March 10th. And the window, again, because March 7th being the State of the Union, shit your pants of the Union address, possible catalyst. You've got Jerome Powell testifying on the 6th. Very unlikely, but yep, we're there inside that window. And then you go into CPI. CPI is going to be coming out on March the 12th. So for this week, going into this week, we can go back to the charts now. We are not filling the NVIDIA gap this week. Yes, we can. Yes, we can. But we are not filling that NVIDIA gap this week. For this week, it's going to continue to be that 50-60 is your support level, as you saw all of last week. You had your big NVIDIA surprise after, again, talked about this going into NVIDIA, how we were very oversold, very much set up for the charts to just face rip to the upside. NVIDIA reported its earnings. It's exactly what we wound up doing. All of last week, nothing but a tiny little fractional dip down to that 50-60 area, minus 1% decline. Never, ever threatened going into that gap. And then you got your PCE change. They changed last month's PCE. This month came in line, but they went and changed last month's and hid the fact that consumer spending, retail sales were all down, well below projections for the month. But because they went and changed the prior month's PCE, we got that big move up there on that Thursday. So there again, we went into Friday, Fridays being Fridays. You got what you got, and this is where we're at, 51.40, 53, which I'll try and highlight a couple of things about that in a minute, but I'm going to stick with the charts here. The full moon now is very much placed on that low being that 49.46, falls within that plus 3 or minus 3 window. That 49.46 is your full moon low. Now, from a visual point of view, you can see very much here that we are right onto this trend line. This trend line, not an accurate drawing, just a drawing for visual presentations. Coming off of the February of 2023 highs, going into the July of 2023 highs, and here we are touching it yet again. Very similar to how we were touching the all-time highs together with the July of 2023 high, I will draw back to be more accurate about my description here. Yeah, we were looking at the all-time high drawn onto the July 2023 high. I was right. I was right what I was talking about. I'm not getting that old. And we came right up to that July 2023 high, drew a high from the all-time highs from back in January 2022. Came right to it here in November, which is where everybody and their mother saw that major move coming off of the October Israel invades Gaza Shabbat Salam fucking bottom on October 27th. We came right up to that trend line, right into Thanksgiving. Everything was extremely frothy. Everything was very overbought. And then we went into December, and suddenly, as we hit into it, I forget what the catalyst was on December 7th, December 8th, we went into our next move. And here we are. So here we are, but that's where we came from. And that's the significant areas for when you do get the turnover. And the window for volatility opens up in about a week. This, I'll go to the VIX first. Here we are on the VIX looking back at December. And as you can clearly continue to see, you are getting higher lows. You're also getting higher highs. And where we ended here on Friday, we ended below that very significant 1339. Bring you onto a default chart just so you can see it from a default view. And again, for visual purposes only, the trend lines, not accurately drawn to the minute like I like to do. You are holding into this channel for now. And again, coming down for the second, third, fourth, fifth time, testing on this support level of this channel. Something to be aware of. Coming back to here, which will lead me into the whatever you want to call it, visual displays that I'll show you in a minute. Here we're looking at the SPX, and we're looking at it from a weekly chart, a weekly count. The plus 34.48% was the increase from Biden's announcement that he won in November of 2020 to his highs here in January of 2022. Almost identical to Donald Trump's, which went from his election day to January of 2018. Then you got a 27.54% decline, much greater than what Donald Trump had. 7 red weeks in a row during that downfall, which again caught a lot of people trying to buy the dip out when that 41.36 came here. Got our bounce into August, and then our big drop over here into the bottom in October. Now, coming off of October, in here from the March lows, we had 5 and 5. 5 green weeks, 5 green weeks. We finished off with 3 green weeks. 5 green weeks was like one of those things that you just don't see. You don't catch 5 green weeks. You catch 3. Rarely ever will you get 4. And coming off of this October 27 Israel invades Gaza, Shabbat Shalom bottom, we had 9 green weeks in a row. 1 red week, beginning of the year, and then 5 green weeks in a row. And then we had 1 red week right there, beginning of middle part of February when we had OPEX week. And that was where the OPEX window closed as we failed to break down below that 49.18, which was very clearly shared going back at that time. We now have 2 green weeks in a row. So I'm going to come off of this and come on over to here. For those who don't know, this is the week of March 2nd to 8th of 2024 cover of The Economist. I shared it there on Friday. It's extremely well known. Okay, so it's not as if just because somebody has lifetime member on their chat name means that they are intelligent in any way, shape, or form. So take that with a grain of salt when you see things posted. This is what I shared going back into February from the 1968 to 1973 SPX weekly count. This was when, Nixon got busted. This was when the Grateful Dead went into the UK for the first time, and we had 20 green weeks with 3 red weeks in between. 20 green weeks, 3 of them were red, starting off here from middle part of October, going into the better part of April 1971. Coming again off of October, November, someplace like that in 1971, after having ripped the 1971 Open to shreds, we had 14 green weeks with 2 red weeks during a 16-week period. Back onto the charts. We are now with a 9, a 5, and a 2. 9 and 7 gives you 16. We have 16 out of the last 18 weeks green. Again, it's not something that is normal, but it doesn't matter because it doesn't matter. Now, everybody wants to microwave their money today. 20 green weeks out of 23 weeks, 20 were green. 16 weeks, 14 were green. And then you went into your nice volatility chops. Over here, you see, you got your incredibly large drawdown after this was done. Over here, you didn't. And we'll not get into that for now. So 2024 is an election year. 2024, 2022, 2020, 2018, 2016, even numbered years, as I shared well back, and Robert Prechter shared as well in his very rare interview sharing his views, who created the book about the Elliott wave. We are in this period in the early cycle of the beginning of the year, the first 1, 2, 3 months, where we should be experiencing a drawdown to end sometime around March or April. And you've had it in virtually every year you go back to that you remember trading. Here's 1998, and on every one of these charts, what I'm looking at is I'm looking at October the 1st into May 29 of this election year, the election year being 1998. So for very obvious reasons, you have the October of 1987 crash that's here, and your bounce off of that into 1998, which pretty much topped out somewhere around March, middle of March, before you started to get your decline down. But you can see here very clearly, in April, you went back up and retested it. Here into 1992, or Bill Clinton, for those of you that aren't aware. Major move off of the October lows, December lows, right up in there into the beginning of January of 1992, and faded off perfectly into April of 1992. And then you went into the election, and you went into the invention of email and the internet. Come in here into 1996, the re-election of, what's her name? Monica Lewinsky. The Monica Lewinsky re-election. Coming off the October lows, big move here up into December, revisit into January, nice little retracement into the beginning of the year, nothing out of the ordinary or significant, topped out here in February of 13, and then started to chop around. But these chop arounds were minus 8%, minus 9% declines, because, again, we're talking about 600 here. Year 2000, George W. Bush gets elected in the year 2000. The dot-com goes into the beginning of the year almost identical to 2022. Very first day of the year 2020 or 2000, we top out and we just sell right off, right into the early part of March. And then we got that last move up to the dot-com highs, 50.52, which was right there in the middle of April or middle of March. And then a minus 13.75% decline in 15 sessions. And you all know the story about what happened after the dot-com highs were placed in 2000. Come into 2004, recovering off of that major sell-off into 2002. Here we are into the beginning of the year, continuing to flow up higher into the early part of January. Little dip, topping out here right around 1155, 1160. January, February, March, we top out with the spike, and then your decline down here to 1080. Call it what you want. Into May, a minus 11, 12, 15% decline. Not going to go out and do the math because the average life expectancy for a male is 78. I'm going to be 52. 2008. You know what? They can't call me a racist because I voted for Obama. 2008, they gave you Obama. They knew they were going to give you Obama because they knew that this thing was falling to absolute shit after the financial crisis in 2007, created when hookers who worked at Hooters part-time had 7 different houses. All of them were 100% financed with no money down. It was very simple to see. Greed is greed. It came right up to the dot-com highs. I didn't show prior to that, but again, this is looking at October into May. October, we topped. Completely different story with what was taking place over here in 2008 as compared to any of the other years. But as you see, we came right to the dot-com highs. You can understand why. And when you look at the bottom of 2009, you can see why it went right to the 2002 lows. 2012, Obama re-election, coming off of the big 1-2 after that major sell-off, after that minus 50% decline on the S&P, coming into your 1, and then H1N1 virus was created after having multiple minus 20% corrections on the way to it. Bottomed out here right around Thanksgiving, a little bit of a dip into December, and then just rallied into the beginning of 2012 into April 2nd, virtually retracing the entire year as you went into the middle portion of May. 2016 topped out here, multiple tops during the course of 2015, multiple at 2110, 2115, multiple. You can even, it started in 2014, multiple tops. Little bit of a dip as you went into Thanksgiving after coming off of the flash crash that was back in the beginning or early part of September. Boom, boom. And right over here in December, Janet Yellen raises interest rates for the very first time since the financial crisis. Little dip, little bounce, and go into 2016 as we bottomed when right at this bottom on 1810.10, 1 minute after the bottom hit on February 11, 2016, OPEC finally came to an agreement and oil came off of that $25 a barrel bottom. And we rallied. We rallied right up into April, right up into May, pretty much double topping, and then you got Brexit. Brexit didn't take you down to 1810, just a little bit of a dip in Brexit. You know the story in 2016. You were around. 2020, floating. Everybody knew about COVID. Everybody knew it was happening in November. They knew it was happening in December. They knew it was happening in January. They knew it was happening in February. And then reality kicked in. You got your minus 36% decline in a matter of 4 weeks. That was in 2020. Very interesting where these placements come in as well when we talk about these 2020s. And here we are today. Here we are today, having come off the Shabbat Shalom. Israel invades Gaza October 27th on a Friday, nonetheless. Bottom, and we are up 25.26%. Here's your trend line for visual presentations only. There's your full moon bottom. Here's your full moon bottom over here in in February. Here's your full moon bottom that came over here right at the end of December. There it is, as well as there in the middle portion, Thanksgiving of November. So we have been dipless. This move, dipless, which makes a lot of people a lot more bearish because it is not a normal not even an abnormal reaction to the Shabbat Shalom Israel invades Gaza bottom over on October 27th, which just happened to be a Friday. So I bring you over into a couple of things I've been looking at, right? And here we are, we're on the ES chart. I'm on a wide view, 360 days, so I can get a 12-hour view and I can see the October 2022 bottom and the move. And this pivot right here, this 51.4450, was how I was able to give you the possibility of SPX 5135-ish on Friday. That was where it came from. Came from this drawing from the October lows, the December highs, down to the December lows, which is a very questionable place. But again, this is the standard count that everybody is looking at. A 1, 2, depending on whether your 1 is December or your 1 is February, they're basically the same, and your 2 is October or your 2 is December. It's questionable to a lot of people. I've shared it. Nobody questions that this was your 3 in July and this was your 4 over here in October 27th, Shabbat Shalom, Israel invades Gaza, which so happened to be a Friday down here at 41, whatever it was. So I bring you here onto the monthly chart of the ES. Now, understand the ES only goes back to 1983. Doesn't go back to the Great Depression like you have on the SPX. So it's a little bit limited, but it is what it is. Now, what I'll do as well is I'm going to duplicate this and bring it over here to show the applicable of how it was as we went into the dot-com highs. You can see here how we got very overbought as we were going into 1996, and it just became lower highs. Granted, they were exceptionally bullish, but how that divergence was in there, before that major 50% decline on the SPX. You're looking at a very similar setup here on a monthly chart going back all the way to 2018, the beginning of 2018, the Donald Trump rally that finally got a dip because he had no dips, none whatsoever during his entire presidency until it came into December or January of 2018. He went on, it was one of the longest runs in history without a 5% correction. So it's there, it's set up. But this is kind of what I want to share, because as much as Elliott Wave is a science/art, it's an art/science, but it all comes down to the point that you're playing a video game. This is nothing but a pre-calculated video game. Excuse me. It's nothing but a pre-calculated video game that it does take a little bit of work, but as we had here, which a lot of you remember coming into the early stages that were trading with me from the beginning, this was a very easy short when we came up here in 2015. A lot of guys remember this. That was how we were able to play the drop down there into February of 2016 and the multiple dips that we had, especially the flash crash, the Lucy passport in August of 2015. You come up here and you look at where you topped out, 29.96.27. You remember on the SPX, which I can find if I have to, I'll share it, how I was calling it 29.30 being the top. And we wound up topping at 29.40 before we got that 20% decline going into Christmas of 2018. And then the Steve Mnuchin PPT and the rally after Jerome Powell stopped raising interest rates and we went into COVID. Well, these Fibonacci's drawn off of those exact pivots of the 1-2 coming off the 2009 bottom coincidentally just happened to be right exactly where your tops are. Your top being right here, your top being right there, your top being right there, the COVID top. So playing around with that, okay? I bring it on to the daily. I'm looking at it from a 10-year. I think 10-year works in a weekly. So just coming off that big 2016 low into the 2018 high, into the December of 2018 low. This is how we know it was not where this wave count is, because the COVID high never broke the 100 extension. Wave 3 cannot be shorter than wave 1, wave 5. But it came close. And then you got your big decline. So undoubtedly, this is cycle 3 and this is cycle 4. Now we're in 1, 2, 3, 4, and we're playing around with 5. But the focus I want to bring on this, and I'll remove this for the moment, is this drawing coming off of these pivots, the 2016 low, the October 2018 high, the Christmas 2018 low, and how the Fibonacci on here, on the ES, is playing very, very well with where the resistance support areas are, looking at it from this 3461.25. Failed it on COVID, failed it as we broke up there in September, dropped down below it, broke out in October after Joe Biden was announced president. Failed it a couple of times here for quite a few weeks over here in the middle portion of 2021. And as we broke up above the 200 extension into which we traded every single week. Every week we were trading right there on that pivot, that 4605.75, 2 weeks. And another one here. Yeah, these 2 weeks. Other than that, we traded 4605.75 every one of those weeks. And then we failed it as we bounced in March. And we failed it as we bounced in May. And we euphorically broke it as we came over here. You know what? I'll zoom in closer. Whatever. 3 here. So, yeah. We failed it. We came up above it in August, but everybody knew that. And we failed it again on that bounce where we got the big September CPI report over in 2022. We failed it on that FOMC announcement in December 2022. We failed it over here in February of 2023. And then we rise right up to that extension, the 200 extension, into the July highs of 2023. And we go right back down to the 161 extension on the bottom here on Shabbat Shalom. October 27th, Israel invades Gaza low. So this drawing is pretty goddamn accurate. And this drawing, what it's showing us is we're probably going to be looking at getting the ES up there at 53.13. That would be another 150, 160 points from where we're at. Now, get even a little bit more interesting. You can go through this in every way, shape, and form you want to, which is what everybody is doing. And they are all putting this into where they are finding the 1, 2, 3s, 3, and they're the 4, the 1, 2, 3, 4, 5 down. And now we're going into a horribly structured dipless move into what people are calling the fifth of the fifth of the fifth, final fifth waves. Well, how about this? How about looking at it as a bearish ABC? C equals A, 52.55, another 75 points up. So there's a lot of different ways to look at this from a structure. And then again, you look at it from only the ES's lows, because it only goes back to 1983, does not go all the way back to the Great Depression, come off the all-time lows, go into the dot-com high, go into the 2002 bottom, and your 300 extension is right there at 50.65. I don't love it, but there's a lot of bells and whistles that are all trying to say, hey, buddy, you're pretty much topped out. And then you come over here onto the QQQ. QQQ, a little bit better structure. Again, looking at it as a 3 completed in July, 4 bottomed in Shabbat Shalom. And here we are going into a 5th. Looking at the QQQ on a daily, we are not only bullish on the daily, but we have no bearishness. Looking at it strictly from an RSI point of view, none whatsoever. Look at it from a 4-hour, and it's very, very clear how you have got this divergence on the 4-hour. Look at it from a 1-hour. The 1-hour, again, very easy to see. Getting overbought, going to oversold. Oversold, extremely oversold. Boom, come out with the PCE, fixes everything. Here we are, overbought as we went into Friday. What time frame you want to be trading is completely dependent upon what it is that you want to be focused on. You want to be focused on the bigger, broader, wider picture. You're going to look out at wider, longer time frames. You want to be out there and you want to be day trading. You're not going to use a time frame greater than an hour to give you an idea as to how much movement you might be able to get. But it all comes down to having your drawings, and I leave you here with Bitcoin. Bitcoin being up here, again, what I see best as a big, wide view, A, B, horribly structured C, or you want to go and call it 1, 2, 3, 4, 5, be my guest, because that's exactly what it is. If you're holding coins and you really do think that this thing is going to go higher as you embark on the implementation of governments around the world that are implementing their digital currencies, I wish you the greatest of luck. I hope it works out for you. We will never wind up meeting each other. You will never fly over here with a box of Cubans. So it really doesn't fucking matter to me what you do with your Bitcoin. However, for those of us that are over here on the SPX, and again, coming back onto our charts and looking at the SPX being the heartbeat of most everything, going into this week, now having the 50.8893 now be the minus 1% level, 5,100 is our bottom. For this week, 5,100 is our bottom. That's it. If we do get a break below 5,100, guess what? You don't need to be a rocket scientist to know that 50.60 has supported multiple times ever since NVIDIA came out with AI. So 50.60 is your bottom. Should you, in the event of a break below 5,100, be visited? But we're in euphoria land, guys, and as much as you want to be, hey, this is this, I will only leave you with a reminder. And you know what, Saul? I will get onto a video about money management. I will, and money allocation and all of those things. Where I'm looking at here now is the May 17th positions, QQQ, because that's where my focus has been. It is now down under $7 on the QQQ 430s after Friday's move. There is only 75 days left in this contract. Only 75 days. And from the QQQ, the NVIDIA gap is only to 425.61. So that's what I got to leave you with is you want to hark and bark, do it. Just got to remember. Actually, I can't say it. I can't say it. I can't because 99% of you don't deserve it. So I wish you the greatest, most enjoyable Sunday. Have an absolute blast. Because I am going to be doing a video very soon about life expectancy and what your goals are for retirement. And I don't think many of you are going to like that very much. So have a great Sunday. Enjoy yourselves. Everything's great with God. Catch you guys on Monday.
Okay, sir, since you're basically retarded, I will have to ask you to follow me so we can get you off this stage, okay? Just follow me. Sir, it's